In this video, we're going to talk about Paysafe, trading under the ticker symbol PSFE. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. Those are prepared, recorded on the day before and scheduled for the next day. If there are significant and volatile movements during the trading day, they will not be reflected in the video itself. With that being said, to the extent possible, my analysis will be based on the medium term or even the long term and not necessarily on the intraday movements. The main reason why it shouldn't matter that much is because most people investing in stocks or even just trading in and out of their positions usually keep their positions open for at least a few weeks. With that being said, if there are significant movements in the stock price that happens afterwards, either they will not affect the overall picture, so in that case we will cover them the next time we're supposed to cover them, or if they are significant enough that they change the outlooks, then yes, I will do a follow-up video in the shortest delay possible with a reevaluation of what I think should happen next. It is the parent company for applications like Squirrel, eCash, and NetTeller. Its offered a value is that it facilitates users to exchange money online with or without a bank. One of the appeal to the market is that Paysafe is a relatively new company that's traded publicly, even though it has a long track record, which is translated in its trade volume and to an extent to its future performance. The stock price is fairly volatile, providing good opportunities to come in and out, but right now this volatility mostly points downward. So we have to make with what we have. In other words, don't try to scalp it like on a daily basis, because right now we pretty much know like where the stock price may go. Unless you're entering only in the stock this week, because and we're going to talk about it later, I think that the stock price is stabilizing. And yeah, there may be some interesting things going to happen. So like many other companies from the same sector, Paysafe seems to have a following online amongst retail traders willing to be patient with it and to even increase their share of investment despite a decreasing stock price. The market cap for Paysafe is currently at $3.3 billion and the enterprise value is at $5.2 billion. The market cap is the price tag financial market is willing to pay for a piece of the company now, considering the future, as well as the short-term fundamentals, and the enterprise value is the net result of the company's assets value once all the debts are paid back. Usually the market cap is higher, but in this case it's a bit of an exception, probably because of the recent valuation change due to disappointing results. Usually the market cap is higher than the enterprise value, but in this case it's a bit of an exception because the company is currently under scrutiny after changing their growth expectation. The quick ratio for Paysafe is 1.13. The current ratio is 1.13 as well, and the debt over ratio is 0.80. So in other words, the company is mostly financed via debts, which is a double-edged sword, because if it's financed mostly via debt, it means that the shareholders are not as watered down as they would be if the company is mostly financed by equity. But at the same time, too much debt would cause the company to raise capital at a higher rate, and this is not necessarily good. And also, there may be an issue for solvency later down the road as well. The average trading volume for Paysafe has been 46.5 million shares over the past 10 days, and over the past few days, the daily volumes have been 22 million shares, 25 million shares, and 30 million shares. So what this means is that Paysafe is still getting a lot of attention, but depending on the way you see it, it could suggest that this tendency is slowing down. So I believe that it's a relatively good thing because right now the stock is on a downward trend, very obviously. And having a lower volume simply means that the market would start to put itself into question and eventually maybe reverse the tendencies. The 1-year beta of Paysafe is 2.31. The 52-week high is $19.57 and the 52-week low is $4.11. Now, let's also talk about the options market for Paysafe. In terms of volume and open interest, the options market seems to favor the calls. Generally speaking, the put options provide the participants to be able to sell the stock at a specific price, and this usually means that the market expects the price to drop, and if the market tends to sell more calls options, it means that the market may have the sentiment that the price may go up. The key strike prices where there seems to be the most interest are $3.50, $4, and $4.50. As things stand right now, Paysafe has an appeal because of the discount in the stock price and because of the volatility that a newly trading stock brings with it. The volatility is something that is really important for any stock in order for traders to make a profit in the short and medium term, and the potential catalysts from regulators authorizing companies like DraftKings, Fubo, or other companies like those to operate online is also very encouraging, because if Paysafe manages to bind itself with those platforms, it would be able to generate a substantial amount of consistent cash inflows and income. So, for instance, Paysafe already reached a partnership with Fubo and is now serving its clients, some of whom may also use the other services of Paysafe via this kind of venue. So, considering that many major institutions are also owning a piece of this company, I believe that the whales are assuming that the stock will be a good company to own for the future. Because after all, Paysafe, much like SoFi, is a way to accelerate the movement of decentralized financial system. People would be able to have the equivalent of a bank account without the hassle of going through the processes of a conventional bank. The recent price action is the result of a reevaluation of the company's worth based on the near-term growth expectations. But for me, the discount of the stock versus where it was just a few weeks ago, coupled with the fact that the company is now part of an industry expected to grow significantly in the future, do make me believe that the stock will eventually enjoy more favorable times. Right now, it seems like Paysafe stock price has been able to hold its ground since the beginning of this week. I believe that it may be a good time to enter the stock now and to keep 50% of your allocation at least, so that you will have the opportunity to commit more capital later when there is an opportunity to scoop the bottom if the price keeps going down, which it may very well be for the next week or so, just because the sellers haven't finished selling. It's as simple as that. The only other thing that I want to see before committing any capital is whether the stock price would be able to hold for the next 1 or 2 trading sessions. It probably won't be a quick get out type of scenario, but it's completely fine because the position would take a few weeks to get filled. I would recommend to commit about 0.5 to 1% of your portfolio in Paysafe and hold it for at least 6 months. Because I think that in order for the trend to reverse, it's going to take about 6 to 12 months for things to really turn around, if they do. And in the meantime, like, some people may be asking, okay, but how do you know that there will be positive catalysts in the future? I don't know. But what I do know is that the current negative news has been priced in. So even if they come back with a new evaluation, it's not going to hurt them as much because this is already yesterday's news, right? So if something encouraging happens in future, such as, more sales or more permits granted or international expansion or the development of their operations in crypto, and so on, these would really help pushing the stock higher. Because we have to remember that even if the company itself may be having some operating issues, the sector in which it is in is very promising. And even if it may take, a few years for the technologies to mature, and even if, and I'm putting this as like a worst case scenario, even if Paysafe is not able to compete against other players in the sector, somebody will propose a price to buy it out. And by that time, my expectation is that things will not be as bad as they are now. We'll probably at least find some support. And also, I think that we're probably going to get a reverse. And I also think that we're going to get like 1 or 2 reversals as well. Your investment should also take into consideration the market conditions at the time and the surrounding sentiment that determine what kind of asset should be picked, for how much and for how long, and when you should be selling it. First of all, the financial market doesn't reflect the real economy. That much is a fact. If the stock market is doing great, it doesn't mean that the underlying company is necessarily hiring more people, increasing the wages, and rising the living standards of its employees. Sometimes it's even the exact opposite, because the stock market is a big pool where money comes in and out, goes to different places in order to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is been used for non-productive purposes like mergers and acquisitions, paying dividends to shareholders, buying back equity, and so on, the less there is for the productive parts. Another way to put it is that ever since 2008, the Dow Jones Index has increased its value significantly. But people don't necessarily see this growth in the main streets. This is why we should be careful with the assumptions of what rising prices mean for a company. Sometimes it doesn't mean anything, other than the fact that the asset is getting more expensive and that their yields is going down. Additionally, some new phenomena are now palpable, and they are the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullbacks. Bubbles have always been created over and over during the past few centuries, ever since there are financial markets. But nowadays, it's quite interesting to see that the speed at which they are created, attract people or capital, and then go bust is getting faster and faster. So almost immediately after the major collapse of the market prices back in early 2020, the same market decided to create a massive bubble of the electric vehicle sector or anything that is related to it. So almost immediately after the major collapse of the financial market back in 2020, the market then decided to, one, recover any sort of price that fell during the first 3 months of the year, and then attract a massive amount of capital into the EV sector or anything that's related to it. Stock prices across the board, but in the growth stocks in particular, went up to the sky for a moment. And even if it didn't last long, this episode definitely allowed market participants, or many of them, to park in their money in a sector and left with either a lot of profits or at least avoiding incurring large losses because they left their money in blue chips or the sectors that are heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, because in the scenarios of a short squeeze, companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then trigger even bigger increase in stock price. But I'm not saying that this is always rational, and I'm not even saying that companies will always have a very convincing narrative or good fundamentals. Sometimes there's none of that. A good example is with GameStop. If you play video games, ask yourself if you would really always buy your games at GameStop, knowing that you would be buying those games online as well, or knowing that at least you have the capacity, the right to buy those games online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price, for the better or worse. Personally, I think that as long as the volatility is high, it'll create opportunities. The final phenomenon is the anticipation of a recession. Many people are expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because of the debt structure no longer sustainable, or that their business model is just bad. But somehow that system was able to hold its ground, especially in the North American market. This is partially because the capital around the world chooses to come to American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that the capital can provide steady returns without being affected too much by central bank policies and inflations, this phenomenon will intensify over time. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain low because the real economy cannot just improve because the asset prices go up. As far as we're concerned, that means that the patience of market participants over the next couple of years will be a great virtue, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and your risk level under check. Your speculative positions should play a relatively modest part of your overall portfolio, so thanks for watching. If you like my content, please like, comment, and subscribe to my channel.